It is Tuesday evening, September 2nd, and that must mean that it is time for our weekly swing trading video. Hello, traders. We've had quite an exciting market. You can see by the chart that I have up right now, this is a 2-hour chart of the SPY. We had a bit of consolidation right here around the 337.50 level, lasted for a few days, and then boom, we got this breakout to a new relative high. That was the high from February, so that is a support level. Very, very important. We're going to be watching that. Again, the number is 337.50. That's a major support level. But you can see once the market broke out, we had this really big melt up, another pause, and now this is a buying climax that's starting to set up. I'm going to click on the trend tool and I'm going to click on one of these highs right here, and I'm going to draw across the top. And you can see that upward sloping trend line right there. This is a bullish channel right now, and we've poked through the upper end of that bullish channel. This tells me that we are close to a buying climax. Typically, once you break through the upper end, you've got maybe 5 days, maybe 10 days at most before you see a significant market pullback. Now, each one of these gaps higher could be that buying climax. And I mentioned in a video that I released to YouTube this morning that these gaps higher you have to be very careful of because you can see an intraday reversal. So let's go into a 5-minute chart. Mind you, this is very, very important. It is a bearish sign, in my opinion. You don't want to go short until you actually have that pullback. We've got some really nice positions on right now. I just want to get them all home safely. We've got about 2 weeks left on our longest term position. We've got some nice trades on. We've got some nice profits on. So let's take a look first at the S&P 500 and what it did today. So the clue was this opening gap higher. That gap held. You can see how we tested the low, 1, 2, 3, and then we bounced. Now the market rolled over again. Before it even tested the low of the day, the market found support and it started to run higher. I can put up the 10p indicator, and there you'll be able to see the buy signal that it gave pretty close to that low right in here. Actually, it was a little bit early right in here. We had one more big bar, one more big test, and then the market took off the rest of the day. Once it got through this high of the day, you can see how it pulled back just a little bit to try and test that prior high. Boom, off to the races. Very strong close. We did see a little bit of selling pressure late, but nothing too concerning given that this was a bullish trend day. Very, very strong price action. Let's take a look at the daily chart and try and get a read of what's going on right now. So you can see that upward sloping trend line right here that's been violated to the upside. You can also see this longer term trend line here. This is something that you should all be doing right now. If you are swing traders and you're interested in maybe trying to take a couple of very short-term shorts, then you should be drawing upward sloping trend lines on some of the stocks that have gone parabolic. I posted a video before the open this morning and I showed you exactly how to do that. Let's draw a upward sloping trend line. If you want them good till cancel, click GTC. This is a really nice low point that we can connect to. This is another nice low point. That is a significant upward sloping trend line right there. You can see how it comes into play right around that 337.50 level. So I'm considering that to be super, super critical support. And I believe that the market could pull back to that level when it comes off of this bullish buying climax. So it's going to happen very, very quickly. You might say, well, that's nothing too concerning. We're at 357.70, so we pull back 20 points. That's 200 S&P points. That is considerable when you're going through a pullback like that. If you've got calls that you're long, even if you're long options that are 2 months long, you're going to see that move take probably 3 or 4 weeks before the market can recover and get back to that level. That's going to be a lot of time decay that you have to weather. If you're short out of the money, short-term bullish put spreads like we are right now, those spreads can very, very quickly go in the money on a pullback like this. Well, why is that? Why does that happen? It happens because you get bullish sentiment and bullish speculation off the charts. So once you start to see profit taking, all of a sudden the bullish speculators get flushed out of positions, and then sell programs start to trigger and they feed off of each other. That's why you get these sharp moves lower. Just like right here, everything was looking beautiful. Look at this rally off of the low for the SPY. Well, right in here, if you recall, we weren't selling any out of the money bullish put spreads. We had some on here, 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 and they were close to expiration. And they all expired before we had to endure this because we stopped putting new ones on. As soon as we had this drop, okay, now we're starting to put some more spreads on. We had this drop here, put some more spreads on. We had this downward sloping trend line. This is when we got super aggressive for about the last, I'd say 6-7 weeks. And then now we've been pretty passive. Although, if you look to the left, we do have 7 bullish put spreads on right now. They're all doing really well. So we're not overly passive. I've just not been giving you 4 new trades a week. I've been giving you 2 because I want to take it very easy and I want this market rally to exhaust itself. I want those bullish put spreads to expire, and then we'll be looking for that pullback and we'll be able to re-enter. That's currently the mode of operation that I'm in. We've had a great year so far, so let's not push it any harder. Now, if I do see a great shorting opportunity, for those of you who are watching who are day traders, here's what I'm going to be looking for. Obviously, I want to see those intraday reversals and late day selling. So in today's case, I want to see the market run up, boom, 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 boom. Instantly, within the first half an hour to 45 minutes, we fill in that gap right away. No question about it. Heavy selling, long red candles, closing on their low. That will tell me that selling pressure is going to be very heavy. Let me give you an example of what that looks like. I'm going to show you a couple of stocks. And there were actually a lot of stocks today. There were tech stocks all over the place had this same pattern. So this is what it looks like. Opening gap higher. Here we go. Off to the races. Not so fast. Boom, boom, boom. Long red candles closing on their low. Even Apple had the similar formation today. There's your opening gap higher, a little bit easier to see on a 5-minute basis. There's your opening gap higher right there. Long red candles, look out. That's how quickly these sell-offs happen. Everything looks great before the open. You're thinking, here we go, I'm going to be counting my money again today. Apple new high, new opening high, and then you get whacked like this. Except that selling pressure continues all day and these stocks really drop hard. That's how quickly it happens. That's what you need to be very, very aware of and be very, very cautious. On a day trading basis, when I see that type of pattern in the S&P 500, we are going to be ready to take some shorts. So that's one of the possibilities that we could see unfold. The other possibility is that the market floats higher. Let's say that this is the S&P 500. Here we go. We take out the high. Now we start to kind of waffle around. And in the last 2 hours of trading, boom, 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 closing on the low of the day. And I think that we had a day like that pretty recently. I'm going to have to scroll back to see if I can find it. But that type of very late day selling is something that we also need to be very leery of. And here you can see a couple of days ago, we had exactly that type of selling. We had a nice little relative high. Didn't materialize into anything the next day, but this is the type of pattern that we'll be watching for. And we want to see follow through selling the next day. So it would be something a little bit more orderly than this because this is just chop, but we would be looking for a gradual grind higher and then boom, boom, boom. Down on the low of the day is where we would close with follow through the next morning. Okay, that's a sign of selling pressure also. We haven't seen anything like that yet, so we can't really be shorting on an overnight basis. As soon as I see it, I may send out an email and we may do a very, very short-term bearish trade, but I've got to see it set up and I have to see it set up really well. And I have to be willing to take overnight bearish positions. Then I'll send an email and we'll try one of them. That the reason I'll only do one is because the market is so dang powerful right now that we've got to be in on the early stages of that reversal. That's when we can make a little bit of money pretty safely. But as that market decline gets older and older, our risk on the short side becomes greater and greater. Classic example was this little blow off rally right in here that ended up reversing. Look, it only lasted 3 days and then boom, if you were short in here at the beginning of the day, market gaps down, you're thinking, hallelujah, here we go. By the end of the day, we're closing on the high. The next day, we gap higher. Those are the types of reversals that we can expect because this market is so dang strong right now. So there are going to be buyers lined up on that first dip, and it won't last very long, but it will flush out some bullish speculators. And you can see that this one, you've got about 1, 2, 3, about 3 days until that, or 3 weeks until that low was established. But if you bought calls in here, look at how long it took you to get back to square one. There's about 1, 2, 3, 4, at least 5 weeks. If you were long options here that expired in 2 months and you were thinking, oh, that's okay, I can weather out a little pullback in here, those options probably expired worthless. So you lost all your time premium. Can't emphasize this enough. Really good time to be on the sidelines. I've been saying this for a while. We've got some nice bullish put spreads on, been able to take advantage of time decay. So I'm not going to show you a bunch of trades today. I am going to show you one trade that is setting up well, and I probably will be day trading it. I'll probably be putting a spread on. I am fearful that the market gaps higher tomorrow and then we get the door slammed in our face. So for me to show you a spread like this and to say, yes, let's add it to our list, let's get into the position, we aren't nimble enough for these videos because I'm assuming that most of you cannot trade intraday. So this is only for intraday traders, members of the chat room. This is a trade that I would be looking at tomorrow. Before I do that, let's get into our positions that we currently have on. Let's take a look at what we've got on, and then we can move on. So I've got the staged order entry screen up. And by the way, just because I don't show you a trade tonight doesn't mean that I don't come up with a trade Sunday night. That's what I did last week. I showed you Dell Computer. Everybody had a chance to get in on that trade Monday morning. It's a really nice one. So if I see something good during the week, I'll send it out. It'll be after hours so that we all have an equal opportunity to try and get that trade done the next day. But these are our positions. Dell, that's a September 18th bullish put spread, so that's our longest term position. We've got a couple of others here, AZN and TMUS. These are actually older positions, really working out well for us right now. So we've got 3 positions that expire September 18th. We've got 1 position that expires September 4th, this Friday. That's an Amazon spread that's doing really well. And then we've got 1, 2, 3 trades that expire a week from Friday. All of them doing really, really well. So I'm going to move this off screen. We're going to take a look at what the stocks are doing. So Dell Computer, I posted this video Sunday night. I had mentioned that this was a support level that we're going to be leaning on and that the stock should move higher. Look at the day that it put in today. So on Dell, we are short the September 18th 62.50 puts, and that's all the way down here. It's going to take a lot to get this stock to go down. Plus, it has not gone parabolic. This stock has spent a lot of time sideways, and they posted a really good earnings report. So I like Dell. Alibaba, there we're short the September 11th, so these expire a week from Friday. We're short the 265 puts right in here. That beautiful, beautiful breakout that we had through that horizontal resistance level. Look at the stock. Right now, we're 30 points out of the money with a week and 2 days left. Love it. By the way, let me bring this back in. You can take a look at the staged order entry screen. Sold it for 50 cents, 9 cents bid offered at 40 cents. Sold this one, Microsoft, for 50 cents, 9 cents bid offered at 21 cents. Sold the Amazon spread for $1. It carries a lot of premium. 47 by 57. Really nice. Z, 10 cents by 12 cents. Sold that for 20 cents. AZN, 50 cents. What we got, 10 cents by 35. And then finally, TMUS, we got 90 cents for, 20-cent bid only offered at 65 cents. So all of these stocks are moving higher, but you can see how reluctant they are to let these premiums die, because right now, with this market climax happening, option implied volatilities are actually increasing, which is counterintuitive. You would think that when the market goes up, option premiums contract. What does that tell me? It tells me that asset managers have had a really good run. They don't want to unload their stocks, so they're going to buy cheap protection. That means that they're out there buying put protection. That also means that they could be hedging by buying VIX futures, or they could be buying VXX or options on them as well. Those are all ways that they can be hedging. And they're starting to do that right now because they recognize a market melt up just like we do. So Alibaba, we're a long way away. We've got a week and 2 days left to go. Microsoft has done really well. We've also got this beautiful breakout right here. You can see how strong the stock has been. On that, we're short the 212.50 puts, which is way the heck down here. So below that breakout as well. That's also a September 11th spread. Amazon is a slam dunk. There we have 400 points. We're 400 points out of the money with two trading days left. And there we were leaning on this breakout right in here and that upward sloping trend line, which continues to move higher. We're going to make our 25% on Amazon. By the way, every single one of these spreads, all 7 of them, we put on for about a 25% return. So when I say that we're not participating in this rally aggressively, we got 7 trades that we're making 25% on, or that are in very good shape to make 25% on. So we are participating. So for me personally, it's a little bit more passive, but for most people who trade, that's just fine to have 7 positions making that kind of money. Letter Z, Zillow. Look at that beautiful move higher right there. On Zillow, we are short the September 74 puts, which is way the heck down here. And we were leveraging that support right there on this stock. We are, gosh, almost $20 out of the money with a week and 2 days left. Looking pretty good to me. AZN, good news there also with their clinical trials and all. You can see how this stock is not going anywhere fast. It's just been flatlining. We're short the September 18th 52.50 puts, which is all the way down at this horizontal support level. So we just want it to do exactly what it's doing right now. Just sit there. We've only got 2 weeks and 2 days left on that one. And then finally, TMUS. It's really a utility stock. We've got a nice little breakout here today. I like this breakout on TMUS. I think it goes higher. I think this is a stock that we can day trade tomorrow. It's very choppy, though. You have to buy dips. Let's take a look at the price action today. You can see this is exactly what I'm talking about. Up and then it's down, and then it's up and then it's down. Yes, there's a gradual uptrend to the stock, but on a day trading basis, you come down, you check that bid. This is a good entry point. You get a nice rally up. You have this upward sloping trend line right here that's been violated. Stock pulls back. Okay, now you've got to start drawing your downward sloping trend line to get a long green candle here that engulfs 4 bearish candles. Okay, this is probably a decent little entry point. Trade it like that. But it's a choppy stock. So as long as you've got the market tailwind working in your favor and you've got a bullish 1OP cross, it's a nice little stock you can day trade. I think relatively conservative. You don't have to worry about the rug getting pulled out from underneath you. So 7 awesome trades. Now let's go over and take a look at one that I like. I'm going to go into the scanner and I'm going to show you the pop bull list, and there were some nice stocks in there, but I'm going to go into relative strength 30. I'm trying to find which list. There it is. Intel was the one that I really liked today. And the reason that I like Intel, again, pretty choppy stock, everything nice, higher, 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 new high of the day. Here we go. They just released some news about their new chip series, so there should be some bullish price action behind it. I also referenced this stock Sunday night. I like it. I like this stock a lot. And you can see that resistance level right here. This is the gap down. That's the opening from the gap. That's now a resistance level. If I hover over that bar, you can see that the open was $52.15. The close today was $52.25. So we are technically in the gap. So tomorrow, if the stock opens higher and the market looked pretty decent, and it looks like the stock is going to start filling in this gap, I would not have a problem selling at the money options that expire even Friday, because that's such a nice breakout right there. This stock should continue to move higher. And if you think about it, Hewlett Packard, we'll bring up that chart very quickly. And Dell Computer, we've already looked at that. You can see there's earnings on Hewlett Packard. Choppy little stock, but grinding higher, breaking through some horizontal resistance. I don't like the stock because it doesn't move, but I'm trying to prove a point. Computer maker, Dell Computer. Really good after earnings. Both of these companies are benefiting from stay at home. A lot of people having to work remotely, and that may continue for a long time. That has been excellent for computer sales. Well, guess what? If it's good for Hewlett Packard and it's good for Dell, it's going to be good for Intel also. Yes, Intel is losing some market share. Apple's starting to make some of its own chips. AMD has really come on strong with its chipsets, especially on the graphics side. But Intel is still a player, and the macro backdrop for the stock is still pretty decent. And I like this technical breakout. So Intel has not gone parabolic like a lot of other stocks. It's sold off hard on that news, but it's got a nice base that it's formed. It's near that horizontal support level. It looks like it wants to grind higher. On a short-term basis, with this market blow-off, if it gets into this gap, I think it's going to continue to grind higher until Friday. So I would be looking to sell an at-the-money bullish put spread on Intel. Again, this is the type of trade that I would be looking to do if I were in the chat room and I were a very short-term trader. Those of you who are not able to watch the market during the day, this is not an appropriate trade for you. We've played it so conservatively and we've made such good money. Don't go burning money on a trade like this when you can't see what the stock is doing intraday. You'd just be asking for trouble. So on this one, I would look to sell the $52 put, and I would be buying the 51.50. And you can see that that 17 cents bid offered at 29 cents. It is a 50-cent wide spread. So if I can bring in 25 cents on that, that's a 50-50 proposition, meaning I'd make 100%. Not too bad. I probably am not going to get 25 cents for that because the stock is at 52.25. More likely, I'm going to get something in the range of 20 cents. And with one more night tonight, moving beyond the stock, what I'm trying to say is you've got another day of time premium decay. Tomorrow, if the stock opens at $52.25 like it did today, you'll see the spread be even cheaper. And so if I can get 20 cents for it and the stock opens flat and starts to grind higher, I like that trade. So I think Intel also looks like a pretty good do here. That's pretty much it. Those are some of the things that I'm going to be looking at. The SPY, I will be looking to short, especially if we get a big opening gap higher and an intraday reversal tomorrow. That's going to be of interest to me. We have the jobs report. I haven't really mentioned much about the economic numbers coming out this week. This has been a very busy week. We had ISM manufacturing came out at 56, really solid number, really good number. ADP had 448,000 new jobs created during the month of August. That was an okay number. They were looking for 1.17 million new jobs in the private sector. Didn't happen. Right now, the second wave of coronavirus is really weighing on the economic recovery. And without that stimulus, a lot of employers are going to have to be laying people off. Is it the initial jobless claims number tomorrow that comes out above a million that spooks people? It could be. Is it a soft jobs report on Friday that comes out? I don't know. It could be. I know that in the next month or two, a lot of municipalities and a lot of states are going to have to lay off workers, government workers, because they don't have the revenue side. So even if the private sector does well, you're going to see some weakness on the government side of employment. I don't know what the news is that's going to crack this market. I only know that it's very extended right now and that we should be expecting a sharp pullback. These pullbacks, when they start out, everything looks great and they come out of nowhere and they come on no news. So if you can imagine, every institution, every proprietary trading company that's out there right now, they see the same thing that I'm looking at. They know that this is a buying climax. They're just waiting patiently for the warning signs. And then when they start hitting the sell buttons and they're able to take out the bid, take out the bid, take out the bid, it's going to be a feeding frenzy on the short side. And that's when you're going to see the market come in very, very quickly. So I'm not adding any new bullish put spreads. We've got we've got one that'll expire Friday. We've got three that'll expire a week from Friday. And then three more after that tend to be relatively safe positions because we've got so much distance right now. If we need to reel them in, I'm going to send you an email overnight. We'll buy them back. We'll move to the sidelines. We'll wait for that pullback, knowing that our best trading opportunity for longer term swing traders is going to come on a market pullback, and that's when we'll have a chance to reload at a really good level. This market is super, super strong. We just have to be patient. That is the type of move that we're looking for. Then a retest of that low. I might even buy calls if I have a retest of the low like that longer term on some of these super strong stocks. Here, I would be selling out of the money bullish put spreads, just making sure that that support level holds on that second retest and the bounce with a break out above this downward sloping trend line. That is a bullish flag formation that we could get more aggressive with into year end. That's all I've got for you this week. If you're watching this video on YouTube, know that you're going to be seeing it 2 days after members saw it. So take a look at the stocks that we've got, see how the performance has been. This week I don't have any trades right now, but if I do have any intra-week, I will send an overnight email out to you. Good luck with your trading. We will see you tomorrow morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.